Okay, Chapter 4, Managing Income Taxes. Please note that I have edited this chapter to reflect the changes up until 2022. So um, the the publisher did an update of the text, which is the text you have, but they didn't bother to put in the 2018 tax law. So that's the reason I'm doing it this way. So anyway, so managing income tax. So, so what are we doing here? We're going to plan for our taxes. We're going to try to find legal ways to reduce, eliminate, or defer income taxes. For you think about you may encounter a situation where you can defer income taxes, or you may encounter a situation where you want to accelerate them. For example, if you're going, for certain that you're going to make less in one year than another, you might want to add income or defer income or accelerate it depending on which year, whether that be this year, next year, or so forth. So and always reducing and eliminating, it's obviously a great thing. The key to do this, we have to reduce our taxable income. The taxable income is the income on which taxes are levied, not total income. So start achieving financial success related to income tax, managing your taxes. Sign up for your tax advantage benefits at work. We'll talk about 401ks in a second, but flexible spending accounts are a good a way to save put money away pre-tax, and then you can pay for your medical expenses. This is especially important if you have some sort of chronic or ongoing medical condition that you have to treat on a regular basis. They contribute to your employee-sponsored 401k retirement plan. This also includes 403Bs or 457 plans if you work in the public sector. 401k is a private sector plan. The complete up to at least to the amount of your employer's matching contribution. The employer's matching contribution is free money. So it's in a lot of cases, you can look at it as like 100% return on your contribution if they do a dollar for dollar match. This one's not as valuable anymore because of the changes in the 2018 tax law. It made it much harder for married couples especially, but and individuals to itemize, which is where you get the benefit on your income taxes on buying a house. So in order to benefit, you have the standard deduction this year is for a couple is $25,900 and something dollars. So in order to benefit from that, your total deductions have to be greater than that. For most people, that won't be the case. So do your own tax return. So you can learn how to reduce your tax liability. So one of the worst mistakes you can make is passing this responsibility off to somebody else and ignoring it. And 5, maintain good tax records. So first learning objective, we're going to talk about the progressive income taxes and marginal tax rate. So the income tax system in the United States is a progressive, meaning that the more you make, the higher the higher your taxable income is going to be. So the higher the tax rate that is applied to that. We'll see that when we get to tax rate schedules here in a little bit. So, income taxes. Taxes are compulsory charges charged by the government on its citizens and their property. We pay. Luckily, in Texas, we don't pay income tax, but we do pay federal income tax on our income. Yeah, and we pay property tax. For example, I pay property tax and a lot of it to Bell County. If you own a home, your property taxes have probably gone up in recent year. Internal Revenue Service is the agency that administers the tax code. The Internal Revenue Code is the code that is created by Congress, the code with which governs the collection of federal taxes. So the progressive nature of federal income taxes, one that requires a higher tax rate as your income increases. The aggressive tax is one that demands a decreasing proportion of your income as you as your income increases. An example there would be I'm not sure it's the best example, but your a Social Security tax or FICA, not the not the Medicare portion, because the Medicare portion is different, but the FICA portion goes away, I believe, around 150,000, maybe 157,000. I forget what it is, but also on the slides, in Canvas, there is a 2022 tax summary that is produced by Putnam every year. It gives lots of details on so forth. But anyway, so back to FICA taxes. That FICA is definitely a regressive tax in that you pay a constant portion up to $60,000, and then after that you don't have to pay it. So next we're going to talk about marginal tax rate.